Good day, shrewd traders. This is Gary Ender from shrewdtrading.com. Today we'll take a look at the S&P 500. The shrewd trading model right now is in a neutral mode. On the left side of the chart we had it in a bullish mode, and then it changed into the bearish mode for a while, and right now it's moved into the neutral mode. Often when we see it in a neutral mode, we see the markets consolidating. Right now the S&P is consolidating, but it seems to be doing so with what we call a rising wedge. If we come in a little tighter on this, we see this rise in price. This is often misinterpreted by many traders who are seeing this as a bullish move, and obviously price is moving higher. And when we see a rising wedge, some people call this a bearish wedge, we want to see at least 3 hits to the trend line on the top. Here we have 1, here we have 2, here we have 3, and at least 2 on the bottom. We have 1 here and 1 here. The price movement within this rising wedge can go quite a bit higher. We can see that it's going to be quite a while before these two lines come together to form the apex. Whenever we're working with technical analysis, we're trying to determine what the odds are of something happening. When we're in a bearish wedge like this, the odds are greater that the market will move down through the bottom of the wedge rather than accelerate to the upside. Many times what I've seen happen is price moves down to the bottom of the wedge, it comes up to about the middle of the wedge, about where we see the 10-period moving average, and then it fails and powers through the bottom of this rising or bearish wedge. So this is something that we definitely want to keep our eye on how this develops. We can also add 2 important horizontal trend lines, one right here. This is where we had this low volume breakout last week, and then it pulls right back below that horizontal trend line. And then of course we've seen very good support in the area right down in here. If this market decides it wants to move down, we will have support at this horizontal trend line we just drew, and we'll also have support all the way down here at the swing low where this rising wedge basically started. We use the same measurement techniques on this rising wedge as we would with any other triangle. Another characteristic of a rising wedge is falling volume. But with the U.S. holiday, as well as the options expiration, the volume is a little bit more difficult to assess here. I just switched to a 2-day chart, so each of these candles is now comprised of 2 days. We can still see how clearly evident this rising or bearish wedge is on a 2-day chart. There's 2 ways that traders might want to play this: by selling each time it comes to the top trend line, the rising trend line, and other traders may want to wait till they see a breakout of the bottom of the trend line. Keeping in mind though that we're going to have support or potential support right down here around 1307 to 1309. Would most likely see the swing low down here around 1267. So even though the STM is in a neutral mode right now, it's still important to be assessing what's happening with the market and what the potential is for any technical pattern that we see, classic technical patterns that we see on these charts. The whole goal of this and shrewdtrading.com is to keep you on the right side of the trade. This is Gary Ender, Shrewd Trading.